learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in on May 14, 2020, and the billionaires are betting against the stock market. Today was very, very weird. We saw another big but relatively smaller day. We're going to talk about this in context, but you had a lot of billionaires, literal billionaires, from David Tepper to I think there's two other guys, and they came out just saying that things were really bad and that they were expecting that the second wave could get much worse. It was really, really bad in the sense of what they said, but now it gets interesting because the president responded with a tweet. He said it was barely legal. He low-key called them out for manipulation. But in all honesty, it was actually very, very surprising. The markets got to react to that. However, don't get caught up with what you saw today with these moves. In regard, no matter what, you're okay, baby. I hope you nap in. You get what I say. But what happened literally right in the morning, pre-market, there was Powell. If you remember, we've been talking about that. We said get ready for this on Wednesday. This was the big effect, but now it was very, very funny what happened. But pretty much Powell had some comments in the morning. We're going to discuss those, but that started the move. The billionaires said something, and then pretty much China and everything else gave us the follow through. It was a big move, but not the biggest. So we have a lot to talk about, and I have, I think, 5 stocks, but I'm really going to focus on 3 stocks and then 2 different industries that I want to be looking at. So I'm going to need your guys' help. So I hope you guys are ready, and that's pretty much it. And then the plays we made one play today, and then we got the keys. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. All we ask is that you're positive and respectful. You can see the plays, post the plays, and just be around some awesome traders. So hopefully you're paper trading. You're not taking this as advice. You're going slow. You got a long-term portfolio, and if you already know this stuff, that's good for you, baby. Just don't quit, and you're not ready to quit. You're just tired, baby. So relax. Sorry, I'm feeling real motivational and excited today. I got a big smile. Okay. So you know what it is. Let's get into it. Right off the bat here, the first thing I want to talk about is that today was small, and I'll show you guys back on the chart, but given the recent moves we've seen in the last 3 months, 100 days, it is small, but surprisingly bigger in the context. Do not forget volatility, since it's been high for the last 3 months. That's where they say the new normal, but given this context, don't differentiate the two. Just don't forget what nothing looks like, and don't forget what a big move looks like. However, in this case, this was a big move. In the shorter term context, it's nothing. So that's why as we start zooming back out of the picture, we got to observe what really happened today and understand that. But people are still paranoid, and I think it's rightfully so. So I'll show you that when we get here. I'm just going to show you the chart now so you'll see what I'm talking about, because now take a look here. 100 days, this doesn't look like too big of a drop. It looks relatively normal. But then we zoom out here on the 1-year chart. This looks a lot bigger. It looks like these big moves had something bigger, because again, see bigger volatility, bigger day-to-day moves. Look what it used to look like. Remember, even this was volatility at one point. It's pretty much dwarfed in comparison, but at this point now is what I'm saying. People are paranoid, so any move coming towards the downside, picture looking over a balcony. So people are going to be acting a little bit weird here, and again, the comments didn't help. So from those billionaires and all that, but that's important to watch out for, because the real question you got to determine, what sort of move are we going to get here coming into the end of the year? Again, that's all I'm focused on, at least for my thesis, and what I'm expecting. It's either we're going to stay in a range like this, we test new lows, but the question is how long. But volume increase today was a point, so watch out for that, but let's understand why now. And now this is probably my favorite part about today. I love it. Big Buck says back out. That's the billionaires. We kind of talked about that, but this was my favorite part, man. Powell says no rate cuts. So we're at 0, and Powell's like, nah, man, we're good. And that is a sign, because you have to think about it now. That is Mr. Powell saying no. So I don't know if he's going to go to emergency mode if things get worse, but for the most part, Powell may realize, okay, he's kind of dictating the timing. So remember, if you read between the lines, I believe, this is my opinion, so you couldn't disagree, and that's okay, but I just firmly believe he knows everything. I don't know. I don't think he's God, but he's a clever man. And they're the Fed. They have all the data. They have all the money. They should theoretically have all the information, or at least some level of more information than the general public. But even in that same breath, what you have to understand is that they have credibility, because if they let you know what's going to happen and they gain credibility, that is how they could also control the market, by being very, very clear. So by him saying no rate cuts, if they go to an emergency rate cut, this puts him in a credibility corner. But then at the same time, he may very well be telling us what's going on, but let's see how the market reacts. Let's see if the market throws a tantrum. But the best part is Powell says no rate cuts, but the rest of the market literally said bet. Literally said bet, fool. Let's show me something. Because this is now what started happening. Remember, I keep showing you this. Remember, they were pricing in the rate raise yesterday. That was showing volatility. And then sure enough, we are back to pricing in a rate cut. But now he specifically said no rate cuts. But the market is just saying, well, we're still going to put our money there. The market said, I get it, like hydrogen vehicles, whatever. But they're like, I'm trying to get in on sunlight before sunlight, So they hit that VTech. And that's what's happening here. But keep note of that, because again, this is the interaction between the government policy and now the open market. So the government or the Fed can't just say this and then completely ignore the market. And if he does, there's going to be consequences and all that. So let's watch what happens. But this is a big, big thing to observe. And if anything, I think this is probably the biggest point of today. I don't think the billionaire fear could have caused this. I think even with the volume and everything you're seeing, the Fed literally has just made a point that a lot of people weren't expecting, and now this could change things. So that was the primary driver for today, in my opinion. Again, what the people said, but then finally the thing that drove it home, China backlash even more. So again, we brought this stuff up yesterday, that whole beef export thing. They're blaming Australia. They're saying, nah, we don't want your beef because it's contaminated. But then they are now hinting at backlash and retaliation against what the United States did that we talked about on the watch list yesterday, which was the United States, Trump directed the pensions to stop purchasing China stocks. But now, I think it was Larry Fink or who was it? It was a BlackRock CEO again, but he's directed, I think like 100 of the 70 companies they're related to stop purchasing China stock. So this is right before our eyes. This is what I said to watch 4 months ago. It may be happening. I may be early again, but take note, because it's one, when does this actually come to fruition? But start paying attention with what steps were implemented before it came to fruition. What were the seeds? And now, or maybe did we see the seed and we had trouble kind of identifying when it was going to root or take root, whatever. But that is important right here. So pay attention to that. And that is the play we made. And I guess that's pretty much it. So let us get into the plays. So right off the bat, even then, I played with the China stocks, and we're going to talk about that. And I tell you guys that the most important thing, you need a poster watch list below. I don't think I did. We need to source that info. So do that. I love you. God bless you. But I need your help here, okay? I want to look at two industries. One, pharmaceutical, some stocks like CODX, and then even Gilead. I want to keep an eye on. Remember, those are the longer-term swings. Those are, if you haven't noticed, we have an army here of how we're playing this. We have different segments. We're going after the trifecta, the bonds, dollar, gold. Then we're looking at the companies and valuations and growth and value stocks and even the dividends and stuff like that. But now let's get into specific industries and related to certain events. That's why the pharmaceuticals, that's virus gold rush, remember? So those are those own little things. So watch those companies. Keep an eye out for them and just see, pay attention to which ones are up and down, look at the prices and think about how you could build and establish positions. That's what I'm going to be doing, but I already have positions, and that's actually going to, let me take it back one more step, because it has to do with playing these. I forgot, what I wanted to tell you guys. I forgot to finish this point, but I said now, know what works and what doesn't. And that's what I'm saying with these plays, because now if we're determining, okay, is this going to be that drop? Is there going to be more downside? Are we going to go in a range? Are we going to break new lows? And you even see the market pick up. Like, oh my gosh, 500 points. What do I do? Where's Josh? Oh my God. A lot of stuff going on, but you have to go look back in the past. What has worked and what are you holding? Because now when I'm making these plays, like I'm looking at the biotechs, but I know I already have some of these companies and volatility worked for me, because guess what? Some of these plays, I still have 2 months of time and I'm down 50% on them. Some I'm only down 10%. And what does that mean? That I know that I still have a position. And then if the volatility increases and these contracts are ready to go up in value right off the bat, know what works and what doesn't. Going after the short term or trying to, play the move rather than getting time is really what I'm trying to say. So that's why know what plays you're having and know what's going to work and what doesn't. But if you're already in plays with time, just because you're seeing news develop and don't rush to make another play, because if you're wrong, And let's say you see the market like this. Let's say you're wrong. Let's say it looks like this. Like this looks like a pretty big move. We're up. It starts to drop. News gets crazy, but then it bounces. You're going to burn a couple thousand with premium and all these positions. And then you're just going to, if you do that every week, it does this. After a month, your portfolio is going to be very bloated with puts that really just don't have time. You were trying to pinpoint it. Know what works. Get the time. I'm talking time frames for a reason. I'm basing my whole thesis towards the end of the year, and it's May. We're at the middle of the year. So it's, again, know what works. I know I could get those plays. They'll still give me exposure in the short term. And then if I'm right on the long term, we got the money. But if anything, if I'm wrong now too, I will lose, but not as much. And it's not going to be, I'm not going to be dead in the water right off of one bounce. It's not going to end up like that. So again, know what works and what doesn't. So that's important when I'm saying even find these pharmaceuticals and what you need. And now this is where I need your help, the trade war stocks. You guys remember when the trade war was happening, there was like a list of companies. So I don't know all of them. I'm not going to act like I do. So if you know these companies, post them below. I know some was like Caterpillar, Deere, Intel with the chip makers, and they've been talking recently about how the government wants them to come do chips here. Post all of these below. Remember, I think there was a list somewhere, but there's like meat companies, that's specific. But that's what I'm saying. Find these little now segments of news and how we see different economies developing. This is how we spotted travel and Uber and Delta Airlines at the beginning of the crisis. So post those below, but pay attention to those because now this, again, the seed has been planted for this trade war, China animosity stuff, and we're seeing it kind of come to life every day. So that's what I want to prepare around. So watch those. And then finally, the 3 stocks I want to buy that I'm going to be looking at, I'm going to be looking at GLD tomorrow. I haven't looked at the premiums yet, but I like how it's held up. It's getting a little bit steam. I have it up there. We could go over the chain here in a little bit. Maybe I will take a look at it, but I just like where GLD's at. And again, this is why I'm hoping the premiums are low. But you see here, this is when we sold off. It's at the same price. But what happened, that was April 9th. It's now May 13th. We just got to burn a month. So now, like, remember, I showed this. You guys remember those GLD contracts. And this is what I'm saying with timing. And some people, like, can you go buy plays now? And, like, yes, you can. Some people say, should I just buy TLT now with what you're saying with bonds and all this? Like, you can, but it's the difference between joining the cult and learning for 6-7 months, and then you see TLT and you had ups and downs, and then you hit it. There's going to be a lot more time and a lot of things that could happen versus joining the cult, and then you just find TLT the next day, and you're like, oh, my God. But you guys remember these contracts. These were the, did we have the 185s? Oh, I think we had the May 15th. I think, no, we had May 15th 185. So remember, that's why we got to burn these out. But even then, at April 9th, you could even see right here, these contracts were going for a lot of money. They're dead. They're dirt cheap right now. But at the same time, this contract, like even those Mays, like they're still holding 34 cents. The June ones, they're still holding the same price as January. But what's the difference is like 4 months has gone by. So these are still expensive, but they lost that volatility there. So I like GLD. I'm going to be watching them. That's the first one. The second play, BABA, and I made this play. And then the last one I need to watch out for is going to be YY. YY, still haven't got that one. But the play that we made on BABA today, I grabbed the Novembers, and this is what I explained, because this is what I've been telling you guys. I did it yesterday. We had June, Julys, and stuff like that. I was wrong on those, but guess what? They're not going to be down as much. Now I'm starting to get the next wave in November, December. So again, I could miss the first wave. I could even miss the second wave, but for me to be wrong, 3 out of 4 quarters, it would I would have to really miss the mark here. And even then, I would have to not buy any other calls and supplement it in any way. But hopefully you see what I'm doing here, because this is how I'm building it out to say, I'm saying know what works and what doesn't. Time and volatility is great. Volatility in little amounts of time, it can return a lot of profit, but it'll clap you. We've already seen it. It's okay. I love you. God, good. Sorry, I'm hyped. But I got 5 of the 90 November puts at 71 cents. So going to be riding those. Again, a swing trade. We'll see how it plays out. And the last one I want to get is going to be YY. And then another play I like is Booking. Industry related. It's expensive, though. And you guys know this. Every time I say I'm going to play Booking, it is just so hard to grab. And I always hesitate. So we'll have to see. I'll make a decision. But just take a look at how it's looking. Again, it's a travel stock. They'd get affected by it if things are breaking out. They got a lot of meat on the bone in the kind of the grand scope of things. I mean, they've already taken a hit and stayed low. But it's a big mover. I like it. We still have some old bookings. But I'm going to keep my eye on that one. And my goal is to try to not hesitate on it tomorrow, but you guys have seen me call out Booking many times, and it's just very hard to find. So maybe if you guys find a good debit spread, call that out. But there is that. And then finally, watch Walmart. Value stocks is the next. That's another segment I want to be watching with how they played out. Again, we have HD earnings, I think next week or end of this week, but they kind of got clapped. Watch I&O, and then you see CODX, but watch these biotechs. Remember, we had these. We got those shares. I think we got them at like $9. I'm still holding those in the Robinhood account, but this could be the time when all of these start crazy again. And you see why I bought shares in companies like this, and I'm holding them. It's not about the little pops and bumps. The idea, again, this is the gold rush. I want the big moves. These are biotechs. We scattered our seeds, and you see, we're doing good with some of them. Winners and losers, diversification there. But I'm going to be watching all these biotechs, even keep in mind Gilead and all that, and I want to see. Kind of just picture what I showed you with GLD and carry that over to Guild and some of these companies where you want the premiums to get cheaper than they were, but still kind of be in play to a degree, or have like gold, gold is still up. So watch them. Baba, JD is the one we got. And then, like I said, YY is the last one I need to get. But again, I was trying to go, YY was even down today, like 4%. So why did I go with BABA today? It was the same exact thing I did yesterday, because BABA closed positive right there. Oh wait, did they go up after hours? But I remember they were barely down. They're moving up after. See, every time. I mean, seeing that, and that's the thing. People ask why even the China stocks, it's low key a double whammy, because even on the first quarter, this was so far 2020 has been the best year for China stocks. A lot of them have outperformed the market. So if anything, they have a lot of meat on the bone. So even then, we will see. But all of that negative stuff can have an effect. So watch them. Again, booking. I just got to not be baby back beep and actually do it, but I got to control the budget, so that's what's going to be difficult. Facebook now, and this is what I want you guys to notice, is the degree to when the stocks start falling off here, especially when we're moving in big increments like this. Pay attention to the difference between hitting a top and kind of sharply coming down, and now another company I want to bring up is like ServiceNow. The continuations, these could be good ones to get puts on. They're higher than the overall market. They got more meat on the bone. So I'm looking at them like ServiceNow, but even like Twilio. You see how Twilio, it's a red day, but do you notice how it's not going down? This could be one of those continuations that goes up, and even when they go down, it'll base at a level and not really move. But then you see like how Facebook, it's a sharper turn down, even like ServiceNow, sharper turn down. I'll give you another one, and all these are the ones I'm going to be watching, like Roku. You see kind of the trend getting bucked. So watch all those. I'm in those Roku puts that we played from earnings. Those are still up actually today, but keep an eye on all three of those. Again, earnings continuations. Now the ones that were the ones we wanted for continuations on the upside, if that momentum just gets stopped in the tracks, let's see how those puts are going to look. And then watch Abivai. They went up. I still want them on the long term, but they were interesting. I think even was Uber. Yeah. Uber, they actually went up today. They're still in talks. The CEO's in direct talks, both CEOs between Grubhub, but they're working on the deal. Some people are rumoring it at $62. Well, it held up. We were down on the Uber shares. Again, the long-term low-key got clapped a little bit today. I mean, not too bad. We lost like 4% or something. That's sad. That's so sad. But I still like the Uber. I think we even talked about the business deal itself, and Uber is good, but that's a long term. But we'll see. Watch them even on the short term. And again, though, let me tell you guys something. A little secret here. Watch Uber and Grubhub on Friday. Think about it, Froggy. Friday, some cheap premiums. Maybe the news drops at the end and it's a little bit of a little wacky wall there, you know what I'm saying? Yeah, watch out for that bugger. But then finally, watch our good old GLD and then TLT, especially with how TLT moved. I like it, but TLT is not there. Again, pay attention to the trifecta and what's going up. Even UUP actually, and that UUP caught my eye. Not ready to play it just yet. Again, you guys got to realize before we grab any puts or anything, you just got to confirm this isn't a pump fake. That's it. Okay, I don't want to foul. Okay, so some of you guys, if you bit on this first foul, second foul, third foul, maybe you got a few extra. This is that maybe your first foul. Your first foul is probably right here. So okay, you're really you're about to foul out. Okay, and that's what I'm saying. So and maybe you're not even close to fouling out. The idea is we could still put points on the board and we could still play this scenario, but you don't want to catch a foul right now, especially when we know fourth quarter is going to be a very good game. And I think that's the best analogy to put it into play. So I hope you like that. That's your watch list. I hope you're in the game, baby. But that is watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to rest, baby. Just relax. I'm not going to say anything else. Just rest, relax. I love you. I appreciate you. You made the coat part of your morning routine, your night routine, anything. But relax, baby. You got it. I don't want no tired soldiers. I don't want no tired people on my squad. You know, they're looking tired. Some of you see a lot of stuff online. It's looking tired. You see it look around, well, that's tired. I don't want that. So rest, baby, because you got to get focused again. You know what they do with the starters? When you see a good opportunity to rest, you see a lead, anything, you take them out of the game, baby. Don't risk the injury. Don't risk the foul. Relax, baby. It's okay. We're going to get it. But the coach loves you. I love you. I'm going to see you in the morning. Let's go. Yes! Now give him the bell.